What's going on, everybody? Welcome back to the Prolific Ones FX channel on YouTube. I just want to thank you guys, for the support from the last couple of videos that I've been putting out. And, I just want to thank you guys for those who are receiving the value and actually applying this value, not only from myself, but also from ICT to your own trading and actually seeing consistency and consistent results with your trading. And for those who aren't seeing consistency, maybe it's something psychologically that you need to, analyze on your own behalf, and also maybe you need to stick to one or two things when it comes to ICT's concepts and try to do your best to become consistent with those two concepts before you move on to any other of his concepts, because there are many of his concepts and it can be very easy to get analysis paralysis whenever you're looking at the markets and you're not consistent with any one of his concepts. So before you start to move on to a whole bunch of his other stuff, make sure you find consistency between at least 1 to 3 of his concepts. With that being said, let's get into it. I'm going to be going over today two trade setups. One of them I was able to take, the other one I wasn't able to take. I actually called it out for my students that were on my live session this afternoon. And the reason why I was looking for sells on US30. All right, so let's break it down. So one, let's start off with the monthly time frame, so you guys can understand why I started with the monthly time frame. Right. So on today's date, right, which is the 21st of April, we took out last month's high. Right, we traded above an old form of liquidity, which is this high. Right, on this day. Not only did we do that, but we also took out the previous day's high. So I would be anticipating bearish price action coming to the market. So let's actually get into why today we sold off. So from yesterday, my analysis, right, going into London and going to pre-New York, I saw that we did not trade, right? This orange line is the daily open, right, from yesterday. This daily open is what ICT teaches as the power of 3, right? And all this is the accumulation, manipulation, and the distribution of price. Price, we opened up and we didn't even move lower. So once price started to move higher and trade higher, I was not a part of any of this price action. I wanted to wait. I was sitting on my hands the entire time. Well, most of it I was asleep anyway, but when we got to New York, right, this is where I was sitting on my hands, right, all up until the New York Stock Exchange open. And once I understood that, one, we took out liquidity from not only the previous day's high, but also from the previous month's high, I understood we can be setting up to trade to the downside. So what I do is I go to the 1 minute time frame, which is where I found my entry. And the annotations that you're going to be seeing, like the ITH, that just stands for intermediate term high. I'm not going to explain what an intermediate term high is. Just go to ICT's 2022 mentorship, and he goes over everything in great detail in episode 13 and episode 12. So after I understood, right here, I delineated that we have the New York Stock Exchange open at 9:30 a.m. Eastern Standard Time. And I noticed that price, we traded higher. So I understood that retail is going to be buying this. And then as soon as we took the high, we traded lower. I understood that retail would want to be selling this because we have bullish engulfing candles, we have bearish engulfing candles. They're all over the place. So I waited. I wanted to see what were we going to do once we broke this low. Once we took this low, all I saw this was as a liquidity run to the upside, targeting this high. Again, I want to reiterate, I am not a part of any of this price action. Okay. So once we take out this swing high right here, price trades lower, we create another swing, well, a swing low, right? So we have 1, 2, 3. This is the swing low. We have 1, 2, 3. This is the swing high. So after we took out liquidity from the highs and also previous month's high, we break past this swing low, right? And we're on a 1 minute time frame, and we create a fair value gap. Okay. So after I understood that we have liquidity taken from the highs and also from the previous month's high, we have the fair value gap with the break of structure. That's my confirmation. The narrative was us trading above the monthly high, right? Liquidity. So the narrative after taking a high would be bearish. So that's 2. And the targets was going to be the lows, which you're going to see where I was targeting on my first entry and what I wanted to target had I actually got into the market on my second entry. But that's all those are 3 things that I need and I use to get into the market. If I don't have all 3, then I'm not taking the trade. All right. No need to put any unnecessary risk onto yourself. Trading is already difficult as it is. No need to do that. All right. So as I'm watching price live, I honestly missed this entry. And it's all right, for the simple fact that I waited to see if price was going to either trade back into it or create a fair value gap for me to get in over here. So after I was watching price, well, not after I was watching price, during me watching price, I noticed that once we trade into this fair value gap, we did break to the low, right? We did take out the swing low, but we did not create any fair value gaps, right? And also, as I'm watching price, let me go back to it. Right now, we're on the 2 minute time frame. Okay. And I understood this is a order block. But in this case, since price was looking to trade to the downside, I consider this a failed order block. And understand, my entry was above this order block before it got violated. Since I understood, where we were likely to trade to, since we took out the highs, well, the previous month's highs, and created fair value gaps, breaking structure, I didn't need to wait to see if that order block was going to get violated or not. I think I just lost my spot for a second. All right, here we go. My apologies. So this was the failed order block, right? On the 2 minute time frame. On the 1 minute time frame, we have that fair value gap. And I understood that price was going to be trading lower. Okay. And the reason why I understood that price was going to be trading lower again was because we took out a monthly high, right? Liquidity. We have a break of structure on the 1 minute time frame with the fair value gap. That's my confirmation. And I have my narrative, which is bearish. And my targets went to the lows. So after I have all 3 of what I needed to see for me to get into the market, my entry is up here. My proof of entry is in my Discord. I'm going to show the entries at the end of this video, but that's really it. Okay, so we had the monthly high gets taken. Right, I'm not going to go all the way back. I'm on a 1 minute time frame. The highs get taken. Structure gets created. Right, we have the high, low, higher high. Structure, right? The swing low gets violated, and we create a fair value gap. This is only valid if you see price trade into a fair value gap above or below liquidity, or into an order block, or something that you're going to be expecting either bullish price action or bearish price action to come into the market. That's the only time where if you see a high, low, higher high, and structure gets broken, that's only in the fair value gap. That's the only time you would enter the market. If you see this pattern, but you don't see price trade above, below, liquidity trade into a fair value gap or an order block, this is not valid for entry. You need to see price trade above or below liquidity. You need to see price trade into a fair value gap or an order block in order for this entry or for this pattern to really work. Okay. So this is the first trade of the day. My exact entry was at 35,485, well, 0.9. So I rounded it up to about 0.6. And I was looking to take profit around 34,155. Right. And that's a little bit below. Right. It's a little bit below the Asian range low. It's actually down here, right? Somewhere inside of this area where I took my profit for my first TP. So let's go back. So as soon as I see price take out this high right here, the first high that traded into the fair value gap that broke structure, I consider this as my short-term high. Right, and the reason why it's a short-term high is because we have our intermediate term high to the right. Right, this is the high that fully, well, not fully, but pretty much rebounds price. So this becomes the intermediate term high. So if price were to trade back above this, then I would understand, you know, maybe the sell idea is not correct and close out my trade, or take a break even or take a small loss, whichever one. So I keep in mind this, you know, what I just said, you know, intermediate term high, we shouldn't trade above it, which we don't. We break down, create another what? Another fair value gap. This is another potential entry, which I didn't take because I already have my entry. I have my other entries from earlier. So I just wanted to be patient and just let the market do what it has to do. All right. And I just waited. And towards the afternoon session, this is where I get on. Now, the first entry, not only did myself mark up, but also one of my other guys, Kamani, shout out to him, the Royal Crown, the Mr. He Don't Miss himself. We both pointed out this 15-minute order block as an entry. And funny thing is, we both didn't take it. And it's okay because we understood, you know, there's going to be more setups to come. And that's exactly what we got. Now, the second entry, the narrative is still bearish. The confirmation was the order block, right? Either one of these could be the order block, but in this case, I would honestly, since this has the most range, this would be the order block. Price trades into the order block and also the fair value gap. And I'm going to show you before. This is at 2:13, right? April 21st, 2022. This is what I pointed out, right? Live as price was printing out the candlesticks. This fair value gap was the entry. Now, I missed this because I planned on market executing it, but, you know, life happens and I took my eyes away from my MT4 and away from my chart. So I was not able to secure this, but a few of my other students who were on my live session, they caught the sell. Right, and all I was targeting was these lows. We have this fair value gap, but the ultimate goal would to be these equal lows, right? These relative equal lows that retail is looking at as support. That's all I wanted to target, and that's all I'm targeting. Okay, so just to break down this entry, I'm going to use the bar replay tool so you guys can see what the price action was looking like. So, and again, I want to say all this is happening live. I pointed out that if we were to trade below this low, right? Once price was up here, I said if we traded below this low and then we broke structure, then maybe this sell would be invalid. Did we get any trading below this low? No. This low didn't take out the low. This low didn't take out the low. This low took out this low, but not this low. We had the fair value gap. This is not a valid buy entry. We still have liquidity. The overall direction of the market for the day is bearish. So trusting bullish fair value gaps, bullish order blocks, or trusting that price will buy back up after trading below a low is not probable. So once I understood that since price did not trade below this low and broke structure to the upside, that we were still going to be selling off, and that also gave me extra confirmation that once and if price does trade up into this area, it's going to be valid for an entry. So as we're watching price, we trade up into it pretty fast. And I was letting them know, you know, when we're bearish and you see price explode like this into an area of interest or a point of interest, this is just the market setting up for an optimal sell or optimal short to get into the market, which is what we got. Now, the reason for the placement of my stop loss to only be around 50 points, right, 500 pips, was because the market is weak. The market, I did not see us trading above this intermediate term high, right? Short term high, intermediate term high. We needed a short term high somewhere. The reason why I didn't see price trading up into this area is because, one, we're very bearish, and we have the fair value gap down here. That's all that price needed to trade into to move lower. And whenever US30 or any indice is moving to the downside or to the upside, it likes to do it very fast, very sneaky. So that's what I understood. And after price traded into the 50%, unfortunately, I'm going to say this again, I was not a part of the trade. My other students are a part of this trade. And so far, they've seen about almost 311 points, which is 3,100 pips, if not more, considering where price is currently at right now. The markets are closed. It's 5:32 Eastern Standard Time. So right now, they're currently up about 3,350 pips off of this one move. So that's just understanding that, one, we're bearish. Two, we have our entry confirmations. And three, we have our targets, right, which is the lows. Let me go to the 4 hour. You guys can see it a little bit more clear. All right, we have these lows and also these lows. That's what I was targeting. Okay, so let me go to the MT4. Try not to expose people. Right, so this is everybody's markups. Well, not everybody, but most people's in the chats, their markups. So this is today. All right, I sent that out. Where are we at? Sniper talk, here we go. All right, so this is the second sell that I sent out that one of my students took. He had actually he had 3 positions on it. Wow, all right, great. So that's one. The other ones they didn't post it in here. But here is my sell entry, right? It says today at 10:21 a.m. This is the entry. Let's go to the 1 minute time frame one more time, just so you guys could see it. Look at this, right? This is the entry. I'm showing you guys on trading view so you guys can see a little bit more clear. But on MT4, this is the entry. As soon as price traded above this high, I press sell. I already defined my risk. I defined not only did I define my risk, I defined it and I accepted my risk. I knew how much I was risking, and I knew how much I was potentially gaining on this trade. And one is all with high probability. Okay, and that's how I take my trades. I don't like to take low probability trades. I like to trade with the market. If we're bearish and the markets are showing me clear signs that we're bearish, I'm selling. If we're bullish and the markets are showing me clear signs that we're bullish, I'm buying. Don't force trades. Don't force trade setups, because in my past, in my recent history, I realized and I've seen, how the markets can really hurt you, not just financially, but also mentally. So that's why I understood, and I take great pride in, the risks that I take in this market or in these markets, because I understand what they can do. They can, as quick as they can make you rich, just as much as they could do it poor, like to make you poor. So that's why you want to be respectful of your risk. You want to be respectful of your trading account. And just because you're okay with risking $500 on a trade and your account is only $1,000, that's half of your account. That's 50% of your account. You may be okay with it, but your account is not okay with it. So be smart with your risk. Be smart with your entries. And understand why you're getting in for a buy or for a sell. Understand, what are you targeting? What are the higher time frames telling you that is looking to do? Go lower or higher? Question the market before you get into the market. You don't get into a relationship with a man or a woman before you get to know them. Same thing with the markets. Same thing with US30. I didn't start to trade US30 live until I got to know US30. Until I got to understand how US30 moves, why it moves the way it does, and what it can give from me, and also what it can take from me. Because it can give you a lot. It definitely can, because we go from today, right, the high of the day of April 21st, 2022, to the low, right? That's about 771 points, which is 7,710 pips, right? And it's all in 6 hours. So just as much as I could give you this much, right, as much as you can make from this, it could take that much from you if you're not smart, right? But today was going to be very short, very simple, quick, concise. I'm just going over the breakdowns of US30 from earlier in towards the afternoon session. But again, I just want to thank you guys for your support. Definitely like, comment, subscribe. I appreciate the kind words that people are DMing me and sending me. Just let me know that they're understanding what it is that I'm going over. And for those who don't understand what it is that I'm going over, take your time, go and study ICT. It's free on YouTube. Let me show you guys. Right, let's go to YouTube. Okay, and right here, the Inner Circle Trader. This man has not only changed my life, but also many other people that I know's lives when it comes to trading as well. So I just want to thank Michael. If you're watching this, I just want to thank you for everything. I know you don't want nobody to call you the GOAT, but you're the GOAT, bro. All right. But again, thank you guys. And continue to grow in your own trading. And just remember, there's no need to rush your progress. There's no need to rush your journey. When it clicks, you will know it, you will feel it, and you will see it. Until then, I'll see you guys next time.